The market is priced for absolute perfection. If there is even a single bump in the road, the market freaks out. Algorithms know that they're ready to sell if something drastic happens, but at this point, they are simply moving with the central banks. As long as the easy money is flowing, keep the party going. You came here for the truth, so let me unveil that for you. Today, we're going to look at the stock market, but I want to cover economic indicators and then get into the reason why the market has been moving the way it has. Let's begin by taking a look at the markets themselves. Here we can see Monday's trading session. The market moved down 200 points. And one thing that I wanted to make mention of was the fact that you have some news that comes out the night before or the morning and the market falls down, as you could see here. And then apparently they have amnesia because the market starts to trickle higher up, further and further. And it's weird that this happens over and over again. It's as if the news in the morning meant nothing in the afternoon. It forgets about it. Now you can point to the plunge protection team, you could point to the smart money, you could point to any sort of establishment or institution, it doesn't matter. What I'm suggesting to you is that it's a repeated pattern, and these patterns happen intraday, they happen from month to month, they happen in different countries. We have witnessed these type of events that occur all the time. So we had this 200-point slide on the Dow Jones. The S&P closes back below its key 2800 level. This was very important to note because we are now at a quadruple top. I covered a video about this recently, but essentially the market fluctuates around this line. It doesn't seem to be able to get its way over there and stay over there for a period. Yes, it did close above and certainly can do that. That's the way these markets work, a little bit above, a little bit below, but essentially we have these levels here in the technical analysis that show us we've got an issue, and that resistance that is being experienced right now is due to what we are seeing with the trade issues. If they are not resolved, it can't be pushed over and go beyond that. So they need to have something set in stone. They need to come up with an agreement. And if that's the case, if they actually do agree, China and the US, I do see this market going higher than 2800. Certainly it's been overdue because, hey, why not, right? The market has been coming up for no apparent reason for this period of time. It never went back to fair value. So why couldn't it go higher? Of course it could. So that's what I'm waiting for. I'm waiting for some sort of trade deal, some sort of agreement on some level. I do believe that it will fall short of the expectations that many people have, but it doesn't even matter anyway. As long as they agree to even one thing, this market is going to rocket higher because it's just looking for that piece of information. Doesn't matter what's going on behind the scenes, doesn't matter what's going on in reality, as long as they have just a little bit of information, the algorithms are going to trade on that. They're not going to trade on the real situation, of course. Here, this just shows what happened. As you can see on the right-hand side, the market falling below that 2800 level. Very important to see when it goes beyond it and what exactly triggered it to go further than this level. Of course, nobody really knows what's going to happen, but I do think that a trade deal that gets put on paper, that gets agreed upon, is going to result in this market heading higher. Of course, what we have seen with the US market is actually a global event. You're looking at the MSCI International World Index, which has gone up considerably throughout this period of time. As of the end of December, just like the US markets, they all came down together, peaking out in September and falling further and further, hitting rock bottom just in the last few days of December, last few trading days, and then has gone up. Everything has gone up since. You look around the world, it doesn't even matter what it is. It's been rocketing higher. The Canadian market has been rocketing higher. Look at Europe. Look at China. They are all doing very, very well today. And that, for me, shows us that these markets are rigged. It should never be like this. If you look at these markets prior to the year 2000, there was always one thing happening in a different part of the world. You would say that this area, maybe it's Asia, is doing really well right now, but look at what's happening with Latin America. Okay, you want to stay away from there. You want to invest in Asia. And then you will look to parts of Europe. Well, this particular country is doing good. You're going to put some money there. Now today, it doesn't work like that. It's basically everything is rising or everything is falling. And that's because of central banks. They completely screwed everything up. And you might think to yourself, well, all I'll do is trade with the central banks. And that's what people have done, particularly since 2009. They've been going with this trade. Nothing's been fixed. Let's be very clear. From the events that occurred during the financial crisis, the derivatives, all of that garbage, absolutely nothing has been fixed. And people believe somehow, some way, I'm not sure why, but the people that were responsible for all of that occurred throughout 2007 and before that, leading up to the events, everything that happened after it, those people are the ones in control of the current financial system for the most part. The same companies, the Goldman Sachs's and the JP Morgans and Barclays and all of these big institutions, they're the ones who have manipulated the system using their friends, the central banks, and they did so somehow, though, they're looking out for you. That's what they believe. And I'm not sure where they get this idea, but sadly, they're going to be burned. The market was reacting to some bad numbers. US construction spending year over year happens to be one of those. You can see that it has moved to levels it hasn't been at since late 2011. You're also seeing the month-over-month construction spending in the United States going into the negative. Now, these are volatile. They move around, but I just wanted to give you some insight on what's happening today. And a little bit of humor for this video. The debt ceiling was reimposed on Saturday and Congress must pass a bill to raise it again. If you remember what happened, a certain individual said, raising the debt ceiling doesn't increase the debt. Well, I got some news that might suggest otherwise, because from that moment that the debt ceiling was increased at that time, the debt has increased by trillions of dollars. Is it a coincidence? No, of course not. Now, I want you to look across the political spectrum, all across the world. In fact, there is nobody, absolutely nobody, that ever suggests to reduce the amount of debt. Every single one loves the central bank system. They all do. Every single one. I've never ever seen criticism of the actual creation of these entities. Nobody, because they wouldn't be stupid enough. They wouldn't be allowed to be put in those positions. Now, of course, what we have is an incredible amount of debt on every single level. The deficits have increased in all of these countries. And who is it owed to? Well, of course, it's the central banks. They are the ones who benefit, who profit, and they use their easy monetary policies to create a trap for the countries, a trap for the corporations, and a trap for the individuals. They are the ones who are going to control everything. And there's no way out of this mess for the average person the way that they're handling it now. They have a 401k, they have a retirement account, they have excessive amounts of debt as a person, as a family. They're making all the mistakes, and unfortunately they're speeding right into a brick wall. They have no clue, but they got their blinders on, and unfortunately it's going to get messy. Well, this shows us what the central banks have done with the real economy. Now, for a moment, use your imagination and think that the GDP represents the real economy. Remember, I said use your imagination because we know about the GDP stats, but just for a minute, let's have some fun. The GDP is at a level of growth that is quite dismal compared to the amount of money, the amount of stimulus that has been put into the system. Why in the world are we at these levels of growth when we have thrown so much stimulus into the mix? There's no possible reason that this could ever be like this in a world of normal interest rates. Whatever the market would decide, but that's not the way it is today. Central banks decide them by using open market operations. They manipulate the rates. And unfortunately, this is what we have today. We have a market that's messed up. We have an economy that's destroyed, and it's all because of this one factor. Easy money screws everything up. And this chart just basically shows you the Fed interest rate, which is the blue line as you see, as well as the 2-year average GDP growth rate. And then overall, this has declined in sync. And that is obvious. Most people who are paying attention are aware of that. If you have easy money, then you mess things up and you ultimately cause the failure to occur. There's no way that this can be fixed by applying more central bank intervention. It just doesn't work like that. Now, one of the most important factors here has always been, as I have suggested, the global money supply. Central banks are printing money and they are in fact directly manipulating the stock markets around the world. Here you can see throughout 2018, the central banks around the world had their first experience of actually reducing the amount of money that they were putting into the system, and the market started to fall, and it fell down hard. From October to the end of December, globally, markets were getting destroyed. And then at the end of the year, we had China, we had the ECB, we had the Bank of Japan, all of them picked up the pace. And then you had the Federal Reserve, who just prior, if you look at it in December, they were all the way to the end saying, no, we're going to increase rates next year. Maybe we'll just do 2 instead of 3. We're going to continue our balance sheet runoff. Everything's going to be just fine. Don't worry about it. Don't worry. And then later in December, they changed their tune completely. They said, no, we're going to be a little bit easier. Let's just be good for now. Let's just worry about it later, so on and so forth. Well, now we see that the entire market is being run by central banks. There's no possible way to deny this. It has been documented over and over and over again. On the left-hand side, you're seeing the Fed's choice of excess reserves target. And essentially what we have is, through this quantitative tightening policy, perhaps erasing the benefits of QE2 and QE3 by the time they get to the end of it, depending on where they end up. We'll find out perhaps in March. And this just tells us that we should be in for a wild ride, because all of that has been so important to the markets. Now, having said that, if other central banks continue to pick up the pace, continue to allow this market to go upon its craziness, printing up trillions and trillions of dollars, funneling it in, well then, certainly we can see the market rising further. But this right here is the most important of all of the central banks, and surely we need to be paying attention. That's all for this video. If you found it informative, please give me a thumbs up. By hitting the like button, you are supporting this channel. So all I ask is that you click one button before you click off, and I really appreciate that. If you want the financial education that you weren't taught in school, that was kept from you, from the school system intentionally, you have to check out these 2 books, from the foundation all the way up to making money. These 2 books have it all. You can find the link in the description if you want the audiobook that's available at themoneygps.com. If you want to find out if the market is going to crash, if it's going to rise, what's going to happen, you have to watch this video. It is 60 seconds long, and it basically explains my thesis for where I believe we are headed.